Woke up late, charts on fire, red and green like a funeral pyre. Discord screened in LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump, I won't forget. Buy high, die hodling. The gen brain dopamine's controlling. Ride the whale, get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shady clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I'll play to win. Even if I lose it all again. Buy high, die hodling. Gas fees burn, but I keep rolling. Almost gone, greed's the king. This crypto dream's a punk rock thing. With the crack in the glass, risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape again and again. Buy high, die hodling. Gas fees burn, but I keep rolling. If I crash, at least I tried. In this wild west of blockchain rights. I'll be trading till the lights go out. Shots of noise, but I live for the sound. One candle spike, and I'm back in town. Crypto's a fight, and I'm 10 toes down. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. But I'll reload, I play to win. Even if I lose it all again. Woke up late, charts on fire, red and green like a funeral pyre. Discord screened in LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump, I won't forget. Buy high, die hodling. The gen brain dopamine's controlling. Ride the whale, get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shady clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I'll play to win. Even if I lose it all again. Buy high, die hodling.
Good morning, guys, or afternoon, depending where you're at. I hope you had an awesome weekend. I know the charts got a little bit more red over the weekend, so some people might be a little nervous, but hopefully my TA will make you feel a little bit better. Because there are some on-chain rules that are close to being met to define basically the same kind of conditions as a bear market bottom. Like, we're really close to meeting almost all the rules that I usually look for when confirming the absolute bottom. And the last time those rules were met was at like 16K. So I'm pretty stoked to see what kind of positioning that we get for this. The drop that we had, I know kind of sucks, but It did evolve the daily market structure to give us a kind of like a better, an earlier confirmation of a strong trend-bound reversal. So we'll go through all that together during this, and I'll talk about what I'm preparing for today and what my trade plans are for today. Who do we got in the chat? We got Coma, of course. What's up, man? We got Sterling. What's up, Sterling? Brett, Noah. What's up, man? Don't know crypto. What's how you doing, man? Alvin, DJ, Blair Force One. Pretty cool name, man. Axel, Josh, Juan, Jason, Chow. Chow and the community and I were all talking about tinfoil hat stuff this morning during the trade hunting call. I'm not going to get into it during this live, but it was interesting conversation. Ian, how you doing, bro? TNB, we got Mark, Ref. You were the recent winner. Congrats, man. Okay, let's get to it. So I'll do a quick local talk, and then we're going to talk about the macro. Just to inform you what's currently happening, like Bitcoin just tried to get acceptance into the 15-minute orb. And the 15-minute orb, for those of you who don't know, is the very first 15-minute candle of the New York session. It helps guide you into understanding how algorithmic bots are programmed for that day. And we tend to use the orb low, the orb high, as a form of support and resistance. When we're outside of it, it tends to act as a resistance like we saw here. And when we're inside of it, it tends to act as a form of support. And like we saw here when we got this little bounce, but we're starting to close outside of it again. So we could be coming back down after losing against the battle of this VWAP, the daily VWAP, and the 2-day, it's almost 3-day point of control here. So we were looking at this for a potential long opportunity this morning, but the confirming candle is too aggressive. If we closed a little bit down here, maybe you would jump in, but we'd have to watch this like a hawk, hoping that we break past it so we can get an extension of our target to the value area high. But yeah, it ended up being one of those scenarios where you just sit on your hands because of the confirming candle being way too aggressive. And the confluence being like, double bottom break, acceptance in the orb after a bounce off the value area low. Good forms of confluence, but the targeting was just too tight and unsafe. And here's an example where you'd be probably getting stopped out very soon, jumping on that. But we do have good confluence below us. I'm hopeful that we have this little demand zone here that kind of helped spark this bounce that we had. We hit the ceiling of this little demand zone here. Whenever you see a move like this, where you have an impulse move up, a base of structure, another impulse move up, you consider that a form of demand, and that's the picture that we painted like here, but we kind of built it in kind of like a regression trend format. So it's like a little ascending support before going up. Same thing, except the liquidity behavior is just a little bit different. We tend to have more liquidity below us during these kind of behaviors. So it'll act more of a magnet to us later if we get acceptance into that demand zone to retrace and take all that. Right? And my computer's a little sluggish today. I had a lot of tabs open. I just closed them before this live to speed things up. But anyways, here is my next area of interest. If we mitigate through this demand here, I'm hoping that we come down a little bit lower so we can get better R&R, because right now this is a fairly tight range. It's only about like 2%. Yeah, 2.41%. So it's a small range. So you'd want to typically have some value area deviation coming down below it a little bit, looking for like a bullish change of character, preferably in between the 3-minute and the 15-minute time frame, because of how small this range is. You're not going to get much room to look at it on like the hourly time frame, for example, to play inside this range. But yeah, I'm looking for the confluence of that value area low deviation. We have a 10-minute and hourly and 5-minute order block cluster right here. So as we approach that area, I'll be looking for structural evidence of support through like bullish change of character. And then I'll be targeting the value area high up here. We could get a target extension past this value area high. We have some distance away from local supply right here. We got this smaller little zone here that we could watch. But overall, if we zoom out on the hourly, we got to treat this whole little guy here as a form of supply concern. And what we looked at in the order books on CoinGlass, CoinGlass has a big sell wall in that area at 82,250. So if we reach past this red box zone I've got drawn here, and we zoom in a little bit on like the lower time frames, we can see that there's that little tiny supply kind of structural behavior. Like I spoke about before, when it comes to trying to identify the demand, when we have an impulse move up, basis structure, impulse move up. Same thing for when we create supply, impulse move down, basis structure, impulse move down. So this whole entire area became an area of interest. We have a 5-minute order block right here, 82,300. And the bottom of that order block is at 81,327. So that's signs of residual orders. And there's evidence of that on the order books right here for 1,000 Bitcoin waiting to be sold, almost in the middle of it, a little bit more on the upper side at 82,250. So if we get that high up, guys, I'm anticipating for us to get a rejection there, right? And then maybe that would create a range extension for this value area here. And at that point, we'd have mitigated this supply right here. So just a recap of what this means for us if we're preparing for a potential long is if we do get the structure that we need to define a safe long down here, we either be here or maybe we take the lows from April 7th around here at 74,500. 74,456, sorry. If we take that low and we get the long opportunity, we're going to take the trade in stages. We can watch the value area low as a barrier. We'd watch the point of control as barrier, the value area high, in hopes that we break past it with the break of structure, and then start targeting that sell wall that we saw in the order books at 82,250. But just because there's a sell wall there does not mean we're going to get there. Limit orders do kind of tend to act like a magnet sometimes because it is a form of liquidity to help people jump out of the market with the least amount of price impact, which means a lower amount of slippage issues, right? So limit orders do contribute to that, but so does liquidation, so does stop losses. But yeah, that's kind of like my trade plan. I'm hoping for a long scenario. If we don't come down here to give us that posture, I don't feel comfortable jumping in on a long around here, right? So I'll be looking for shorts if we don't get the long, right? Just waiting for the opposing scenario and then go off that. Because jumping in, even if we get a break past this POC and this VWAP, I'm concerned that the R&R is not going to really be there if we only make it to the value area high before retracing back in again. Okay, so that's kind of like my short-term play. I do want to talk about the macro today, guys, because the macro, what's evolving right now is really important. When I prepare for my biggest trades, I have two of my biggest trades in history are based on these rules. And if I zoom out on the daily, I'll talk about the two scenarios that I jumped in on. And I sound like a broken record to some of you, but I just wanted to make sure that if there's any new people jumping in, you'd understand like how you could just, wait for the one beautiful setup and it could change your life. Obviously, make sure you follow proper risk management rules, but the last two times I did this kind of setup, I did not. Here, all the on-chain rules were met, and I jumped in on an inverse perpetual long, meaning I risked to lose Bitcoin instead of a stable coin to earn more Bitcoin instead of try to earn more stable coins. Most of you guys are familiar with trading with USDT or USDC in hopes to try to gain more USDT, right? More stable coins. But with inverse perpetual, which is now rebranded since I've started trading to coin margin, you use, let's say, for example, Bitcoin to earn more Bitcoin. And if you lose your trade, you lose your Bitcoin, right? So I did inverse perpetual setups here when all the on-chain rules were met. I front ran this double bottom neckline break with a lower time frame internal double bottom break. And down here was shortly after. I'm using Bitcoin's perpetual chart, so we don't have the full history. But let me just pull that up just so I can give you guys a better picture. Zooming out on the daily again. This is my super old chart. Out here, all the on-chain rules were met to tell us that we're going to have a large move up, just like it was here, right? But I wasn't trading at this time, nor did I know or make these rules at that time either. But yeah, I used it as confluence to help guide me into this long. I jumped into a long here. I risked to lose like 10% of my account. It was kind of too much. Same with here. I kind of risked to lose too much of my account as well, like 6%. I don't plan on doing that this time around. Even though those trades worked out really well, that kind of behavior could really set you back if you're wrong, right? And now all the same rules that were met for calling this as a bottom and calling this as a, not the bottom, but the rally move, after a break of this macro downtrending momentum and confluence with all that. Yeah, those were my two life-changing trades. And we have almost all the rules met for the exact same kind of setup, even though now our price tag is much, much higher, at like 77.9K is our current price tag. When we go to the supply and profit and loss, this is one of the rules that I look for to determine when it's time to repair for the kind of like bear market bottom kind of conditions, right? When we reach below 50%, that's where you see this green line on your chart. On this chart, this is Glassnode, guys. So this is a paid platform, but you can use Chain Exposed for a free version of this. The downside with Chain Exposed is that they're super slow to update. Like the last update they gave was on the 7th of January. So sometimes the information you're getting could be too late, right? So what you could do is you can look at the last positioning we were at when we got the last screenshot, which on this chart says at 93K, 75% of the supply was being held at a profit and 24% of it was being held at a loss. And now we're at like 70K. So you want to be informed of what the supply is currently at in terms of profits and loss to help define a longer term setup and prepare for the big move, right? So you can estimate with this chart if it's slow to update. It used to be super fast to update once a week, but lately it's been like once a month, once every 20 days, once every 60 days sometimes. So I switched back to Glassnode, even though it's kind of a paid platform. But you guys have me, so if you ever need to find out what something is at in terms of on-chain data, you can just message me in the Discord and I can screenshot it for you, so you don't have to pay for that tool. But anyways, right now the supply is at 56%. 56% of the supply is being held at a profit right now, which is the lowest it's been since Bitcoin was at around like 18, 19K. It's a big drop, you know what I mean? So if we get to this green zone, then we know that the average supply is being held at a state of capitulation. People are holding at a loss. So you got to prepare for DCA entries and accumulation to start when we get down to this area, because historically this has helped call the bottom every single time. So I'm preparing for that kind of scenario again. The only thing that's really changed in terms of the on-chain data is that our new poll chart hasn't really fully resetted. So it's kind of telling us the net unrealized profits and losses. That's what new poll stands for. It's this green, red, and orange, blue chart. Each color represents a different form of emotion, and whether or not we are kind of oversold or overbought, right? So red means capitulation, orange, fear and hope, right? Yellow is like anxiety, optimism. It all kind of depends on which way we're trending. So if we're going down, then people think, anxiety. If we're going up, then people are kind of in the optimism stage. What we kind of want to see have in confluence with the supply being held at 50%, 50% of the supply being held at a loss or greater, is us seeing this suggest that everyone's capitulating as well. But it's going to be getting harder and harder and harder for that to happen with all these institutional involvement. They're going to be accumulating at rates that's kind of, and the accumulation that's happening right now is kind of going to make things slower to drop and slower to climb, especially with all the manipulation that we've got going on. So I think we could dip into like the orange stage, like the hope and fear, where we are at around 0.22 on the Newpol chart. And right now we're at, 0.29 based on the price of 78,700. So we're really close to kind of meeting that orange zone. And the last time we were there was on the October lows. If we zoom out, bigger picture, it was right around the banking crisis, if you guys were around during that time. Right here is when the last time we were in the orange zone in the Newpol chart, like the 0.22 levels, right? And we're almost at that stage now. And I'm expecting for us to get into that area, maybe if we were to tap around this value area high, this 250-day value area high from the last time we were ranging, we're 250 some days before we came up. And a lot of retail exited the market during this falling wedge, right? And we retested that value area high. And now we're trying to take these lows and potentially come into this demand zone. And this is going to act like a huge brick wall, right? But I do want to talk about the worst case scenario. And just in case you are able to identify when it might happen. So if we go range bound in this demand for a little bit too long, and we end up using, and then we're breaking past this value area high, which is at around 68,800, and we use that as a form of resistance with a break of structure, that is a form of acceptance into a value area. And when acceptance happens into a value area, we tend to rotate to the opposite side of the value area. Think of it like a teeter-totter of a fair value, right? When we see us get acceptance into here, someone pushes, and then we get to the other side. And then we get here, someone pushes, and we get back to the other side. It's like ping pong, back and forth. We do not want to have a break of structure, especially in larger time frames, leading into this, because then we can get a rotation down much further to like 59K. That's like the doom and gloom scenario. But I'm telling you, this is a very strong brick wall, and then we should find support here for a potential reversal. But we do want to make sure that we have the structural evidence to support that first before aping into a long, throwing our, savings into something like that, right? So what I want to see have happen is these lows from maybe April 7th being swept before we run up, so we can use any liquidity that might be there in the form of stop losses, liquidations, as fuel to help drive us back up. Our daily change of character level evolved during this drop in a positive way, in my opinion. Because right now, before we were watching 107 as a key level that we wanted to have broken before we start seeing people using swing-bound rules to define a strong entry. Now those rules could be confirmed at a lower level down here. And if we consolidate here to this downtrending macro momentum, let's say we consolidate here for a long period of time and stack more buy-side liquidity above us, then we could have our daily structure evolve to a much lower level to prepare us for a daily change of character rather than later. We do have evolving momentum here. That suggests we could be range bound here for 15 days before it breaks. Doesn't mean we have to range here for 15 days, but when you start monitoring sell side momentum or buy side momentum, you notice that negative space tends to get filled before we end up reversing. Think of it like the pace of the sellers, right? And now it's suggesting like a cool down phase. All right, now zooming out, I do want to talk about how we're kind of getting squeezed between two forms of like this demand, the supply zone up here and this demand zone down here, and how our range could evolve based on that momentum. So if we were to come up here and we get a rejection, you gotta kind of think of, I'm thinking much lower than that. If we get rejection maybe around here, this could act as a range extension to provide us like a larger range to give us better setups. And a larger range tends to mean we range there like a longer term, kind of like what we saw before when we were ranging for like 70 days in this more macro range that we had here before we lost it. So we could have similar behavior to here and similar behavior to like this double bottoming structure here. And we're just waiting for that picture to be painted. And right now we're kind of just, forming the left side of that. But yeah, that's my rant. I just really want to let you guys know like what I was seeing in the on-chain analytics and how I'm kind of mentally preparing for a potential macro move up. And our goal as traders right now, I would suggest like focusing a lot on those, like the combination of those on-chain rules with our current posture, like looking at longs at the extreme lows of our active range in hopes that we break these highs. So I'm going to be really careful, not just exiting out with a limit order at my highs, because sometimes I'll do that, especially if I'm going to sleep. I'll have like a limit order exit at the value area high, just trying to get in and out of my setups to get those quick gains and grow my account at a fast pace. Now, what I'm going to do instead going forward is set a lot of alarms near my key levels that would normally take profits at because of opposing confluences, right? Like value high, maybe we get a bearish change of character. And unless I see evidence that we're going to get acceptance back inside of value area and rotate back down towards my entry, I'm going to stay in my long positions the most and hopes that we get continuation posture. And if we don't get the continuation posture, then I'll get out. But if we do get it and we get those strong moves back up, then I'm going to hold my trade to see if we can catch the absolute bottom before a more macro move back up. And if we do get that macro move back up, 107K is going to be a huge barrier, but we do have some prior to that. Like this is, to think of this like a large supply concern that hasn't been mitigated, and it has a lot of value area confluence here as well. It's got that 97-day value area high confluence right here from this range that we were in the past. I don't know what's going off my drawing here, sorry. So if we look to the past, we were range bound here for the 97 days. Now that floor could act as a form of resistance like it did during our last 70-day range. And the ceiling can act as a form of resistance like it could for the floor of this supply. So I think that's going to be one of our biggest barriers, our biggest boss that we need to beat in order for us to consider the all-time highs again. But I'd be happy if we make it up to like 97K on our long before seeing strong opposing confluences that could define a reversal. Like we got our daily order block here. We don't really need to talk about this stuff just yet, but I do want to like just inform you that if we do get our long setups, we're going to take things in stages, right? If we get our long here, we're going to be watching this value area like a hawk in hopes that we get acceptance into it to give us a target extension to the value area high. And same kind of scenario when we get into that 97-day value area acceptance in hopes that we get that rotation to the value area high. And by then, the 200-day EMA, the 50-day EMA would have kind of gotten closerly caught up to our price action, and we could get that golden cross scenario when the 50 crosses above the 200 for good swing-bound confluence to support our more macro move up. So lots of things to prepare for, and it kind of all begins around here in hopes that we get that, that strong reversal structure alongside of our on-chain rules. And our on-chain rules are basically there. We're so close. So I just recommend everyone get ready. This could be the time that we get that reversal coming in. And if Bitcoin bottoms out, altcoins should start to repair from the pairing confluence with Bitcoin. Now let's catch up to the chat, because I went through a lot, and let's see what we got going on. Okay. Save us, Kyle. Thanks, man. Got. Hey, Crypto Pollo, how you doing, man? Hope you're having an awesome day. I haven't seen you in a while. Are you looking for a similar bounce on Ethereum? So Ethereum has a ton of pairing liquidity, with Bitcoin. Meaning when they created Ethereum originally, they had merged it. They bought Bitcoin and they merged it with Ethereum's liquidity. So as Bitcoin goes up, so does the value of Bitcoin's bank account, quote unquote, right? It's liquidity pairing. It's called the liquidity pairing effect, where when Bitcoin goes up, Ethereum will kind of go up with it, unless there's some kind of like opposing relative weakness, which is, it happens. It does happen sometimes, but it's not as common as you think, especially when we're at like bottoming locations like this. Ethereum should be carried up alongside this, but you still want to make sure that you see like all your rules are met with Ethereum and not just Bitcoin alone. I tend to trade Bitcoin the most because I don't have to worry about what Bitcoin is doing when I'm trading my altcoins, right? If you're trading an altcoin, you want to have the same bias effect from the Bitcoin side of fence. And where is Bitcoin positioned at the time when you do an altcoin trade, right? Like is Bitcoin at the bottom of its value area, or is it at the top of its value area? If it's at the top of its value area and looking like it's going to break and get acceptance back in, I'll be very hesitant on jumping on any longs for altcoins in a scenario like that. So I would rather Bitcoin be positioned in an area where it could go up and get a bullish change of character before thinking about jumping into an altcoin, even if all my altcoin trade rules were met, right? So just be really cautious with that. But yeah, I do think that Bitcoin is going to carry the torch for Ethereum, and then Ethereum is going to help lead alts in behind it as well. Any altcoins that you see lately having relative strength and not losing key levels are the ones you tend to want to focus on preparing to accumulate when everything's kind of telling us that we're going to be going back up. And we're basically at that bottom, guys. We're just lacking a few structural rules. If the bottom signals are in, where was the top? Sorry if I missed it. There wasn't a top signal yet. The top signal haven't been met since the last cycle. We've been seeing a lot of price suppression, and we can go over that maybe during our next live, especially when we do decide to jump into our long and how we can prepare for the top. It's the same. If you go into the course, Noah, I know you have access to it. In the course, if you go to the omniscient strategy, it will tell you all the on-chain rules that need to be met for calling the top. The only thing that's different this time around is that we're seeing a lot of like 3,000, 5,000 Bitcoin sell walls pop up, suppressing the price down. So now whenever we see those occur in confluence with the Newpol chart, not so much the supply and profit and loss, but the Newpol chart up here, we're seeing around the 0.6, 0.59 kind of level, acting as an area of concern going forward. And I'm expecting that we won't be at that area again until Bitcoin's price is around 160K. So around here, if I see an opposing like bearish change of character on like a larger time frame, like the 4-hour or the daily, I'm going to be considering taking some off the table this time around. Whereas I didn't through here because I was in such a low position that I didn't really feel like it was a threat. There was like a lot of, like throughout history, the Newpol chart has helped call us the absolute top perfectly every single time. But if we look at the last cycle, it was barely there. And this time around, we were about like 10 points away, 20 points away. So I didn't anticipate it to be the absolute top, and I still don't anticipate the current top to be the absolute top before going into like a multi-year bear market. And it's crazy how much the price has kind of drawn down from here. But yeah, and that the fact that like it's almost like bear market bottom conditions are fully met, like that we're at the bottom, the same way that we were like around 16K. It's just like it's getting prepared for how mature Bitcoin's becoming. The rules might start to shift where we have to prepare at different levels and not just the ones that we're used to based on extreme volatility, us usually being overheated a lot more dramatically than we used to before in the past, because it was driven a lot by retail in the past. Compared to this cycle, we have a lot more institutional involvement. Good morning. You believe the macro has changed? Yeah, I believe the macro conditions have changed, but it's more of like I'm thinking that the supercycle theory is actually becoming more and more correct based on the on-chain data. Sup, Alex O'Crypto? How you doing, man? We got another nerd in the house. I'm glad you're starting to feel better, bro. I am sore. I actually had to go in a moment to go to kickboxing I had a grading on Saturday. Got my next belt with I do mixed martial arts at Core Martial Arts in Brockville. And I had a birthday party for my son's birthday. He turned 11. And I helped my dad move last weekend. So I'm toast. Yesterday I had to take a break because I just felt like jello. And I'd probably like lower everyone's energy. If you start listening to me talk yesterday, it would have been brutal. Should read Wintermute's 2025 over-the-counter market report. They actually discussed and how they already happened. Interesting. Okay. Well, they're also market makers, so yeah, take that carefully. Okay. So yeah, just a quick report over what I'm preparing for with Bitcoin one more time. Bitcoin, we're fighting against the POC and the VWAP. We're losing that battle as we speak. I'm hoping for positioning with a deviation away from our active valley area. This is a valley area that's almost 3 days old. We've been here for 2 days and 22 hours. We're about 2 hours away from confirming a third day. Time with valley areas creates strength, right? And trust. Like our 70-day valley area that we were just in. That was an amazing valley area that had a lot of fun trading in. But now, we are kind of establishing a new valley area, but with a huge amount of macro interest. So I'm preparing for like a bottoming effect. Locally right now, I want to see price action come down to this. This is an hourly order block. If I zoom on the hourly, you can see it a lot more clearly. It's based on this doji candle and this engulfing candle here, right? So you'd wrap from the wick low to the wick high on this candle here to define your order block zone. This is structural evidence that there could be residual buy orders down here. But when looking at the order books and trying to validate that, there wasn't that much buyer's interest. So just be a little careful and make sure you wait for that structure. There's more seller's interest, and it seems like most of it is at like 82,250. So make sure you wait for structural evidence of support first through like a bullish change of character. The range is tight, so you might not get a 15-minute time frame. Like we had this ascending double bottom here. That's not a proper change of character. We had this ascending double bottom here. You could use that. It's called a form of flip to define a reversal. So you can look for that kind of posture. Or preferably, price action go up and create a lower low and then break that neckline and then jump up from there. With the order block, valley area low deviation, and maybe a break of evolving momentum if we get it. Right now, this is our current evolving momentum. We might get that confluence we need to jump into along from here. If we get a body candle close instead, below this low, like a full body candle close, then I'm expecting for us to come down to our green box zone at 73,500 is the ceiling of it. But the brick wall inside of it is all the way down here at 68,700 area. All right, so If this doesn't hold, when we come down, like between, like 72K, it's a very strong level, and 68K is a very strong level. These are worst case scenarios if we get the body candle close below here. So just watch out for that, guys. But yeah, that's kind of what I'm preparing for. I've got a long bias right now, waiting for the price action to come to me. And then it's just a matter of waiting for structure at that point. We're almost got the positioning. We just got to wait for the structure when we get there. Alrighty. Get the Otter Gang in here. What's up? Hype analysis. I don't have time today to do altcoin analysis. I'm sorry, man. I do got to head out to like Tuesdays and Thursdays are like my shorter lives because I do kickboxing with my wife right after this live. But hopefully by the time I come back, Bitcoin will be at the positioning that I want, and they can give you guys a long signal. If you're part of the community, you'll be able to get that signal. Just a matter of staying on our hands. And yeah, today we moved our trading masterclass call to today at 4, because yesterday I was just, not feeling it. I was really tired, man. But I got a good reset from yesterday, so I'm excited. Now tonight we're going to go over, for those of you who are going to be a part of the call, we're going to go over value area bias, how we can determine which trade direction is the best direction to focus on when trading a specific value area structure, based on market structure and based on value area behavior, the volume behavior here. Like, for example, this is a P frame, and P frames usually suggest that market structure is going to be breaking to the upside statistically. B frames, another example of double distribution, where price action moves quickly between multiple ranges. Stuff like that. I'm going to go through all that together. But yeah, guys, I hope you guys have an amazing day. Thank you for liking, subscribing, sharing. We're growing at a faster pace, and I really appreciate it because I know that's all because of you guys and sharing the lives there. But yeah, we're just about sitting on our hands, waiting for longs here at this hourly order block. We might get an initial bounce off this 15-minute order block, but we've started to mitigate this little demand zone we started forming. So a candle close in here could lead to a drop down to our next area of interest. And that would give us much better positioning for longs and better R&R when we're targeting the value area high and being mindful of that point of control and the OR15 in confluence with that. We don't have VWAP on our side for this long, so you'd have to watch the VWAP as well. So just got a few things we have to babysit. VWAP, POC, that'll be the main things you want to watch. And then after that, if we could breach past those zones, then we should get that full rotation to the value area high, where we can prepare for a sweep and return back in. If we deviate further up, we know we have a massive sell wall at 82,250 that could halt the price action and bring it right back down. All right, guys, you have yourself an amazing day. Thanks for liking, subscribing, and sharing. And I'll see you guys in the next one tomorrow at 10:30 a.m. Eastern, where I'll be able to do a lot more altcoin TA for you guys at that point. And based on the Bitcoin's posture, alts shouldn't run up too much today. It'd be more of a quiet consolidation in hopes that it returns back up, unless that asset you might be looking at has relative strength. All right, see you guys. You have a great day.